When you liquidate your limited company, it's not just a matter of closing the doors and walking away. Suddenly, you'll have multiple people all wanting answers. You've got your creditors, your staff, your landlord, banks, and even the insolvency practitioner themselves. And if you don't know who you're dealing with or what they expect from you, you can actually make some pretty costly mistakes. Now, I know what directors are thinking. I can't even keep on top of my creditors now. How am I supposed to deal with all people once liquidation starts? Where do I start? That's why today I want to break it down in plain English, step by step, no jargon, no scare tactics, just the truth about who you'll be dealing with and what they care about most. So in this video, we're going to cover the key stakeholders in a liquidation process. I'm going to talk to you about what each one wants from you as a director. I'm going to talk about the risks if you ignore or you mishandle them. And I'm going to talk to you about the right way to approach each one. By the end, you'll know exactly who's in the room, what their agenda is, and how to protect yourself while dealing with them. So let's start off with the insolvency practitioner. Now, the insolvency practitioner can be called a number of things just to confuse you even more. Could be called the IP, could be called the liquidator, could be the insolvency practitioner. It all means the same thing. In an insolvency, they become the liquidator of the company once they've been appointed at the creditors meeting. Okay, so when you're going into insolvency, you will sign some notices, and your notices will be convening a creditors meeting generally 7, 14, 21 days in the future. And on that creditors meeting, the plan is the insolvency practitioner that you've appointed actually takes the hot seat. They're in charge. Now, their legal duty is to the creditors of the company. It's not you. They're there to advise the company, but their role is to represent the creditors. Now, what their job entails is to sell assets, if there are any in the company, and distribute the money to the creditors of the company. They're also there to investigate your conduct as a director and report on your conduct to the insolvency service and other creditors. Now, what do they actually want? They want your full cooperation. They want your attention. They want clear records, ideally. They want you to be compliant. When they ask you a question, they expect you to come back to them quickly. They're going to want explanations of any big transactions that you've taken out of the accounts, especially on the run up to insolvency. And what they're going to look at, they're going to look at your bank statements, they're going to look at your last filed accounts, they're going to be checking for things like overdrawn directors' loan accounts. I'm going to come back to that a little bit later. They're going to be checking on things, dividends that you've paid yourself that may be illegal dividends. I'm going to come on to that a little bit later. They're going to look at your bounce back loan, how much you took, what you spent it on, should you have took one in the first place. And they're going to look for anything that smells like preferential treatment. And dead quickly, all that means is once you become insolvent, your business can no longer afford to pay its debts when they fall due, your liabilities are more than your assets, you have to change the way you operate. You're no longer there for shareholders. You cannot make creditors' positions any worse. And you've got to treat creditors equally, which means you can't be paying your mate Dave back the money you've borrowed him and still not pay HMRC back. You can't prefer anyone on top of another. So the best way to handle an insolvency practitioner is to be organised. Be transparent. Don't hide things. Listen, they'll find out anyway. That their job is to investigate, okay? They're going to find things, so you're better off getting them out on the table early doors. And the more open you are, the quicker the process can be and the more clarity that you can have, okay? Next person you're going to have to deal with, or group of people you're going to have to deal with, is the company creditors. Now, the company creditors are everyone you owe money to. It can be HMRC, it can be suppliers, it can be banks, it can be landlords, it can even be directors or shareholders that have lent money into the business. Now, in liquidation, they rank in a strict order of priority, okay? So the first person to get, if there's going to be some asset realizations, if there's going to be some money due in, if there's going to be a dividend paid back to creditors, remember that's the insolvency practitioner's job, The first person to be paid is a debenture holder, someone who might have a charge, okay? They're called secure creditors. Then there is preferential creditors. That could be HMRC, it could be employee claims. Then you've got unsecured creditors, like your general standard suppliers. Then you've got connected creditors, okay? So that could be you, the director, right? Now, what does a creditor want? Well, they want the money back. The reality is they're not going to get the money back, so they want as much as possible. Now, HMRC and secure creditors, they've got the stronger voice in something like this, because secure creditors are the first person to get paid, HMRC are preference. Unsecured creditors often get very little, which is why they get the angriest. Now, this is some advice on how to handle creditors. Don't make promises you can't keep. Don't pay favourites before liquidation. It's called a preference and it can be reversed, okay? Once you appoint an insolvency practitioner, let the insolvency practitioner communicate with the creditors, okay? What your role in this is to give the insolvency practitioner all the accurate info about who's owed what. Once you appoint an IP, their role is actually to liaise with creditors. Now, a word of warning. A lot of directors are going to put a business through an insolvency process and they're going to start a new company. Now, you will expect some creditors to be really angry with that and they're not going to want to support the new company. And that is, listen, that's true. For me is, if you are clear and you communicate properly with your creditors, okay? If you're not racking up debts with no intention of paying with them. Let's say you're a business owner that's been going 20, 30 years. I see this all the time. And for whatever reason, the business has become insolvent and they've had to use an insolvency process. You don't have to write off those suppliers working with you in the new company. I want you to, just for a minute, think about if you was a creditor, okay? If you are a supplier that owes your company money, you've got a number of problems here. Number one, you're not going to get paid the money that the insolvent company owes you. Now, you may be insured against the debt, I don't know, but problem one is you're not going to get paid. But here's problem two, and problem two people forget about is not only are they not going to get paid this money, but they're going to lose a customer that's been a good customer for years, okay? Now, as long as you're transparent and you're communicating with creditors earlier, don't rule out them supporting you in the future. Obviously, it's a case-by-case basis, okay? Now, next person you're going to have to deal with is employees, right? Now, their position is, well, first of all, the preferential creditors, which means they get certain entitlements ahead of other unsecured creditors. But liquidation almost always means redundancies. Now, what do your employees want? Well, they want any wages that they've not been paid, they want the holiday pay that's been accrued and not taken, and they want redundancy if they've been with you for over 2 years. Now, in the UK, this usually comes from the government's redundancy payment service if the company can't pay it. So anyone who's been there over 2 years will get between a week and a week and a half's pay, capped at £719. If there is holiday pay that's been accrued and not taken, that will also be paid out, and unpaid wages will also be paid out. Now, there's also a thing called notice pay. Notice pay is paid to staff in lieu of not getting the correct notice, and all of this can be claimed from the redundancy payments office. Now, how do you handle staff? Listen, the key thing is be honest. Don't promise jobs you know won't survive, and give the insolvency practitioner full and accurate payroll records, so when the staff claims are made, they can be processed quickly. Now, the way that you treat employees at this point says a lot about your conduct. Let me have a quick drink. So, what happens is, once you've decided what insolvency route you're going down with the insolvency practitioner, you then need to put together a plan and a strategy to speak to your staff. Now, speaking to staff, what we'll do here, by the way, once we've sort of brought one of the insolvency practitioners onto a call with us, is we'll give you a guide, sort of a fact sheet to how to talk to your staff, and we'll also give you a point of contact. So if your staff have any questions, they can actually physically speak to and email somebody. Now, the way that redundancy works is at the point of liquidation, staff are made redundant. And on the creditors meeting, they get something called a case reference number, and that allows them to go to the Redundancy Payment Service website, it's a government website, and put their claim in. Now, as long as your payroll records are accurate, that will allow the insolvency practitioner to confirm the redundancy so they get paid out quickly. Now, it's hard to say exactly when your staff will get paid, but for redundancy, holiday pay, unpaid wages, it's generally 4 to 6 weeks after a creditors meeting. Now, bearing in mind, if you're watching this and you're going, right, I want to go into insolvency, I want to go into liquidation quickly, it's going to take really 14 days to set a creditors meeting, and then they'll start the claim. So in real terms, it could sort of be 6 to 8 weeks that your staff aren't going to get that money for, okay? So be mindful of that. Next person that you're going to deal with, HMRC. Because most of yous out there owe HMRC money. It could be VAT, corporation tax, PAYE, combination of all three. There may be some returns that you've not done that you're really better off getting them in and getting them up to date. But people are worried, well, what do I do with HMRC? Well, once you've appointed the insolvency practitioner, it's actually the insolvency practitioner's role to communicate with HMRC and tell them what's gone on. They're going to serve notice that you're going into liquidation. But there's a period before that. And what's very common is people never want to pick the phone up to somebody like us. By the way, if there's something I've said so far that resonates with you, put your details in the link at the top of the description, and one of my team will call you today, okay? But there's normally that grey area where you owe HMRC, you're hoping to get out the hole, you're hoping things will get better, you're robbing Peter to pay Paul, and something happens and it dawns on you that actually you are going to end up in insolvency. Now, HMRC are generally the straw that breaks the camel's back. They might turn up at your premises to take some goods. It's called the Control of Goods Act. You must avoid that. If the HMRC are threatening a Control of Goods order, you have to pick up the phone today. If it's not to us, pick up the phone to someone else. There's some great firms out there. Because HMRC will come in with a clipboard. They'll go around all your assets, make notes of it, you'll sign it, and from that point, HMRC own your assets. And they might leave them there, but if you don't pay your HMRC debt in full, they're going to take it and then your business is going to be over. Even more serious, you might have a winding up petition that lands on your doorstep, or the threat of a winding up petition. And that is where HMRC have got to the end of the road with you. They've not made a recovery. You've broke a time to pay arrangement. You are ignoring them and they go to court to wind you up. Again, please do not let that happen. And again, if it has happened, you need to pick up the phone now. Stop what you're doing. Pick the bloody phone up. Right. So HMRC need to be spoken to. Now, the key thing is, for me, you always have got to keep HMRC in the loop, even if you're telling them that you can't afford to pay them and you're going to miss paying your next VAT return, or you can't pay this month's PAYE. But tell them that you're going to keep them updated. Now, if you're going through an insolvency process, or you're intending to go through an insolvency process, and things are getting a little bit hot with HMRC, it's a good idea to let them know that you are going to appoint an insolvency practitioner. And generally speaking, once you've signed a 64-8, that's like an authority form, the insolvency practitioner can speak to HMRC on your behalf. But remember, until the insolvency practitioner has been formally appointed, HMRC can still take action against you. So for me, you've got to communicate with HMRC as you're going through this process. Now, someone else that you're going to have to speak to is people that you've signed PGs with. So you might have signed personal guarantees on loans, on credit cards, certain suppliers. Now, when you're going through an insolvency, so you've made the decision that you are going to go into liquidation, you're about to appoint a liquidator, it's really good to get an idea and a plan how you're going to deal with your personal guarantees, okay? Now, that plan can involve speaking to them all, telling them all what's going to happen, and actually start putting together a plan of what you're going to do when all of those PGs crystallise. Because when you sign your notices, everybody gets informed of the insolvency, that's when all these loans are going to crystallise and they fall on you personally. Now, in most cases, the lender or the supplier wants their money back, even if it's over a longer period of time. So you'll be able to renegotiate and restructure the majority of these loans over a longer period of time. And with some people, you'll be able to offer them as full and final settlement. So you might owe them 50 grand, but you can get together 20 now as full and final. With stuff like that, I believe you need external help. I've done a podcast with a chap called Gary Whitehead, IFT Assist. He's really, really good. There are other firms out there. I've just worked with Gary for years. Again, if PGs are causing you a problem, probably time to give us a call. Drop your details in the link below and someone will call you. Now, the next thing is you might have to deal with is banks and secured lenders. Now, what their position is, banks with a fixed or floating charge, they get paid first from assets tied to their security. If you've signed personal guarantees, they're also going to chase you directly once the company is gone. And again, a guiding principle here is review all your guarantees before insolvency. Know what you're personally liable for. Don't assume that your debts vanish, because secured creditors have sharp teeth, and they also are generally the person who can have the final say on who is appointed. A lot of yous out there are going to have to deal with landlords, right? Landlords are creditors like any other, but in liquidation, they usually just lose future rent, okay? But they may be able to try and claw back arrears or block access to premises. And that you might have signed a personal guarantee, not just on the lease, but on the dilapidations. And I've seen some dilapidations claims come in that are crazy. Someone's painted a building and put a delapse claim in for 50 grand. Now, you may need your landlord's support, especially if you are going to start again and you're going through some pre-pack. Now, if you're going through a pre-pack and the lease is in the company name and not your personal name, you need that landlord to support you with a new lease. Because once you go through insolvency, the lease ends. So they could decide to just get rid of you. It's ended. We don't want to support you again. So the key thing is you've got to communicate with landlords early. Even if it's just a wrap-up liquidation, there's nothing at the end, what you want to be mindful of is the landlord could come and change the locks and cause an issues for the dispersal of assets, okay? Let the insolvency practitioner handle any rent claims, and remember, if you've given a personal guarantee, you need to know where you stand. So, who are the major stakeholders you'll be dealing with in liquidation? You've got the insolvency practitioner. They're running the process and they're going to investigate you. Creditors are going to be chasing for repayment. Employees want the wages and they want their redundancy. You've got HMRC who really need a call on the run-up to appointing an insolvency practitioner, so they don't take action before you do. Obviously, you've got banks and secured lenders who are going to enforce security and guarantees. Then you've got your PGs, get clear about them, and remember, you might need to speak to your landlord. Every one of them has their own agenda. Your job is to cooperate, stay transparent, and avoid making promises you can't keep. So if you're a UK director under pressure and you are facing liquidation, don't go into it blind. Contact us at Director First today. We're here to help you understand your risks, protect you from personal liability where we can, and if we can't, make you aware of it so you can deal with it with a fresh set of eyes. And we're going to guide you through dealing with every stakeholder on that list. So, if you've enjoyed this video, right, and it's connected with you, I want you to go over there and I want you to click on the video, because it's going to take you through to a playlist about what to do before you close your company. Go and hit it now.